Hi, I'm Eddie C. of Purchase Rationale and the author of Trend is Trend. The date today is 27th of February 2023, almost the end of the month of February. It's a Monday and the time is 12:52 p.m. Malaysian time. Purchase Rationale rationalizes 15 reasons when considering a particular stock to buy. A disclaimer before I proceed that whatever I share here today is purely for information and education only. Should you take action to buy anything after the discussion, please first consult a financial planner or a licensed broker. The stock in question today is one that I have revisited four times before, and today is the fifth revisit. So, what it means today is that this stock gets our attention because it is in a continuing trend momentum, and the stock is CCK. All right, it's a farm production, mainly producing eggs, all right, for the consumption of the local market and perhaps Singapore. And the stock code is 7035. Since this is the fifth time, I will still go through the fundamentals again. Normally, I don't do that, but I think it's important for you to relook at the fundamental and decide. The reason why I'm doing this is because from the uh, supply chain vendors that I have received news that they are going to increase the price of eggs beginning June of this year. So it's good to look at the fundamental of companies that supply eggs and see what is the future potential for such a stock. All right, let's look at the fundamental. In the case of CCK Consolidated Holding, stock code 7035, all right, the operating earning yield percentage is 7.04, meaning should there be an existing differential between the intrinsic value and the market price, CCK can actually cover the differentials between the two. Okay, on the magic formula side, if you add operating yields percentage with ROIC, that makes up about 24.3%. Okay, as far as I am concerned on the arbitrary figure, 15% is good enough to qualify me for consideration. And since it's at around 24.3%, it uh, covers the mark that I'm looking for. Okay, on the magic formula side. It has a low enterprise value to EBITDA of 2.57, meaning you are buying at a good valuation price, even though the market price may have gone up slightly. Okay, a low PEG ratio of 0.05, meaning there is still good potential for growth. Still pays a dividend yield of 2.25%. Positive free cash flow trailing 12-month basis of about 28.3 million. Healthy Poitrowski F score of 6. Uh, if it goes up 7, then it will be more promising, but 6 is a good start. And Altman Z score, that is the bankruptcy score of 4.6, which exceeds the normal 2.5. Okay, market cap of 482.5 million, current ratio of 2.2. What we require is 1.2, basically to meet if there is any debt commitment. Uh, Definitely current ratio of 2.2 is healthier than 1.3. Okay, it's a net cash company uh, because it has a negative net debt of 5.9 million, right? And because of that, it has a net debt to EBITDA ratio of negative 0.03 and a healthy, strong, sustaining retained earning of 215.37 million. I would say CCK looks like a promising investment grade company, and because of that, um, I will now take a look at the technical side of things. As you can see, actually, CCK has been doing a bit of higher lows here, here, and here. And today, because of the higher load, we can say that the trend has been established and is continuing to trend upwards because it is above the cloud. And today it has done what we call the MA rebound, meaning the price candlestick has risen above the MA21 line, right? So trend confirmed, momentum is good because if you look at the momentum, uh, you can see that the ROC rate of change is above the zero neutral line and has remained so for quite some time now since middle of May last year. Okay, and of course the price action candlestick is also above the cloud, so momentum is intact and the entry strategy is a MA rebound. So in any case, the price action is actually riding on wave 5 now between impulse wave 4 to 5, and our target is at the apex of wave 5. And should you buy at the current price today of at 77 cent, okay, closing price at 12:30 just now, with a target price of 84 cent and a stop loss of 72 cent, you will have a risk to reward ratio of 1.5 times. Now the reason is this: I said we have been revisiting these stocks uh, for the fifth, including today for the fifth time. So most likely it will hit our target at the peak of wave 5 before it corrects again. All right. So we will be taking a lower risk reward to risk ratio of only 1.5 times. Okay. So and good news is that this is a bias intact situation where the volume has reached the average relative volume of 1. All right. And you can see uh, all the MA lines are above the MA233 line, meaning it is a definite bullish trend and momentum. Okay, so looks like the situation is good and positive, and If if you think what I share today is informational and educational and a good suggestion for consideration, please like, share, and subscribe. If you like, it will help the channel to grow. It will also help to improve the algorithm of YouTube. All right, and when you share, you will allow others who might be interested to take a look at this stock and to watch the video too, right? And if you subscribe, yeah, you will get notified automatically whenever I do a new video of such a content and nature. If you do not understand some of the technical terms that I use here in the discussion, Please put a question in the comment section and I will get back to you to explain what they mean. It is my job to help you understand what I share. Thank you for listening and also your precious time. You have a good day and bye bye.